Well, as we continue to dig into this, Nvidia, of course, blowing minds once again, fueling further hype around AI with quarterly sales triple what they were a year ago. Nvidia CEO Jensen Huang saying, quote, accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. Well, joining us now is Dan Flax, Neuberger Berman Managing Director. Dan, thank you so much for joining us. So in terms of the demand that we know is there, what about the capacity to meet that demand? How confident are you on that side?
Good morning. I expect NVIDIA and its partners to continue to add capacity in the months and quarters ahead. If we think about what's going on here, NVIDIA's solutions are empowering others, for example, cloud companies, to expand their business, create new revenue streams, and ultimately grow. And so this broader story about NVIDIA's platform, its ecosystem with millions of developers, remains vibrant. I think we'll see good growth through the rest of this year into next year as supply continues to come online.
Dan, there are already concerns about the valuation of this particular stock going into earnings. Now, right behind Apple as well as Microsoft. Given the numbers that we got yesterday, does the valuation match where the company is? You see it pushing even higher.
We think the stock remains attractive here. If we think about the next couple of years, driven by the product cycles, NVIDIA should generate significant free cash flow, and that free cash flow will continue to grow in our view. And so when we look at the valuation in that context relative to the growth prospects, I think the stock remains attractive here. To be sure, these businesses are cyclical. There are, of course, product cycles, macro cross currents, but the underlying drivers of the business remain healthy in our view. And I think we'll learn more at the company's GTC conference next month about the product roadmap, which helps lay the foundation for additional growth.
And to that point, because you would think that the idea is that in that 10-year cycle that Jensen Huang was talking about, some of these costs should be expected to come down. How do you then gel that with what we might see in terms of the product roadmap, as well as how they plan on executing as you see other companies coming in, trying to really get on board, especially Intel here, and really try and have some competition here?
I think competition in this market will remain fierce. The key for NVIDIA is to continually drive value for their customers in new areas. So as they bring out, for example, their new architecture for the data center likely to be introduced next month, the performance, the capabilities, the features are going to enable NVIDIA's customers to add value in their businesses. Think about areas like drug discovery, fraud detection, climate change, really the re-architecting of the industrial landscape as you marry the physical and the digital. And so the growth and the use cases, I think, remain attractive. If we look at what some of the other companies are doing, I think AMD, for example, has an important role to play. CEO Lisa Su and her team are developing and continuing to broaden out their product roadmap in areas like the data center GPU market. I think we're going to see good growth from there. What we saw from Intel yesterday in terms of their foundry strategy, I think CEO Pat Gelsinger and their team are continuing this multi-year investment strategy. I think as we saw with their Microsoft customer announcement, Intel has an important role over the next several years to play in the foundry market and more broadly, certainly in the data center AI market.
Particularly in the foundry market, Dan, how quickly do you think Intel can ramp up the production? Obviously, they're trying to take away some market share from TSMC, which is, produces most, if not all, of NVIDIA's chips right now.
I think it will take several years. Intel has to demonstrate continued improving execution on its roadmaps, and you're seeing that under CEO Pat Gelsinger. I think what's important, though, is the foundry market's expanding. We're seeing the increased geopolitical dynamics shift how big chip customers want to tap into supply. We're obviously going to see a lot more growth here in the United States in terms of chip manufacturing capacity. And so Intel, I think, has an opportunity to grow. We'll have to see over the next few years how they execute, and I think it will take time and require a significant level of additional investment as we think about the back half of this decade.
And certainly, Dan, when we think about the high-performance chips, all roads, at least at this point, still go through TSMC. Even on the foundry side, roughly half of the global semiconductor foundry market in terms of revenue still is dominated by TSMC. What do you think are the biggest headwinds that people should be aware of in the growth story when you do have such a concentrated player here?
Well, I think with respect to TSMC, they continue to execute very well. They have invested alongside of their customers and have a multi-year roadmap, which they're continuing to perform well on. I think with respect to Intel, the goal for them is to demonstrate, and we saw that with the Microsoft customer announcement, that they can deliver for their customers in foundry and at the same time continue to advance their own businesses. And so Intel, it's going to take time. The key is that the market's growing, and the strategic importance, really the tailwinds for the foundry market, are, I think, going to be substantial over the next several years. And so we are going to continue to watch closely in terms of Intel's ability to execute that. But again, it remains very early for Intel.